In my last video that I made about Alibaba, I said I love this company. And guess what, folks? I still do. We are going to load this up in the stock research tool, and we're going to do a stock analysis on this business. So load this up in the stock research tool. We're going to grade this on the financial valuations, sitting at a 7 out of 10, a pretty decent score. We're losing points in a few categories. That is the 5-year PE average sitting at 35.19. And we want to see that underneath 22.5, which we don't have. We have a share dilution of 2.86% increase. That means they have issued a few more shares than we care to like. Ideally, we want to see this number going down, or at the very least, staying the same. And finally, our return on invested capital average is sitting at 9.29%. We want to see this over 10%. So those are the wrongs that Alibaba has done. Now, apart from being a Chinese business and owned by Charlie Munger, and he sold half of his position, Monash Prabrai has had a huge position in this and sold it at a loss in order to possibly buy Tencent. This business, I believe wholeheartedly, is a solid business. We have positive numbers across the board, huge net income growth, huge free cash flow growth, and huge revenue growth. The trifecta. I love seeing these green numbers here. But on the other side, current ratio is sitting pretty decent at 1.64. Low debt to equity, crazy EPS growth, and a great return on equity average. 7 out of 10 is not bad. Pretty low Almond Z score. Can't say I'm happy about that. Mediocre Piotrowski score. But guys, take a look at this. Take a look at this. This company's, hold on, first, before I even jump into this, just take a look at this revenue for a quick second. Look at this lovely box. 2014, and we're slowly going up, right? Revenue, it's growing, no hindrance there. Now take a look at this. I'm going to put this back. The stock price sitting at $87, folks. So you know the company has done extremely well over the last little bit. But look, we are pretty much below their IPO price. Take a look at that. 2014. You see what I showed? Look what I showed you. 2014, we were sitting at $52 billion in revenue. Now currently sitting at $717 billion in revenue. Look at that. Sitting at 89. In September 2014, we're pretty much almost $90, and we're pretty much there. So many years afterwards. Hitting a high of 230, the 52-week range, and pretty sure we hit an all-time high, 2020, something like that, 317. Guys, this company has been falling like crazy because of the VIE structure, and it's just been knocked down by a considerable amount. All the news that's surrounding China, everything that's surrounding China has got this company knocked down. But what does that mean? What does that mean? It's all this news and noise, but the business has been improving. The stock price has been knocked down. You have to look through the noise, folks. You have to look through the noise. Take a look at this, guys. Same story. Same story. The only hindrance I can possibly see is that you're questioning China. You're questioning the absolute trustworthiness of this country. Now, I do think that's a fair point. But here's the thing. If it were ever found that the numbers coming out of China were completely falsified, completely wrong, this company would have its investors pull out their money as soon as possible. So quick. Other Chinese businesses would suffer, and the Chinese economy would just be riddled with so much speculation and not speculation, what am I like? Skepticism. I'm guessing right now investors are feeling a little bit skeptical right now. These prices have been pretty low for quite some time. And wholeheartedly, I'm invested into this business. Am I happy about this price going down? No, but not for the reasons you think. I would love to pick up shares of this company at this price. Unfortunately, I can't. I'm going to be maxing out how much I want to allocate towards this business based off my portfolio size. We'll cover position sizing because I think that's an important topic to talk about. That's for another video. But I've maxed out my position of how much I want to invest into this business. So jumping in at $87 just doesn't make sense at the moment. But if you are invested into this business, you are probably feeling beaten down. You're probably feeling that you made the wrong decision, that this company is taking your money, that you don't want to sell at a loss. But why? Why? Because of all the news surrounding it? Listen, you know the US economy wants to be the top dog in the game. You think they're going to support other competition? No, listen, you got to support your pockets, folks. This is coming from a Canadian. I own one Canadian company. Why? Because Canadian economy is not the best economy in the world. We don't have that many great companies, and frankly, so why would I put my money into an economy or any kind of company that can't beat American companies or frankly a Chinese company? I want to make money just like the rest of you. So why not? And this is what I see with Alibaba. This is the company that knows how to make money, that knows where it stands. And I'll stop blabbering. What we're going to do now is we'll jump into a price analysis and I'll show you what this company is all about. Let's put in some numbers and we'll figure out what this company is all about. And folks, if you're liking the video so far, hit that like button and the subscribe button. It means a lot to me, it means a lot to the channel. And this software that I have in front of me here that analyzes these companies within an instant, it can be yours. It's coming out, it's going to be an app, it's going to be on a website, you are going to love it. So give me a second, folks, while I populate these boxes here, and we'll touch base in a quick second. We assume the 10-year evaluation, all right, because I believe Alibaba is going to be around for 10 years, probably longer. And look, this is what we did with the revenue numbers. Take a look at what these numbers are here. 49, 48, 40, cut it in half. I think they're going to do 20% revenue growth a year. Half of what they're currently doing. Same thing with profit margin. We're going to just give it a slight haircut. Free cash flow margin, it'll probably be around the same. Price to free cash flow, keeping it around this 11.75 mark, sitting at 10, 12, and 14. And a super low PE ratio. Currently sitting at 23.38. We want to put that at 12, 14, and 16. So guys, I'm taking a stance of being conservative. I'm saying they're going to do half of what they currently done. Similar profit margins and free cash flow margins staying roughly the same with a low price to free cash flow, a low PE ratio. Putting in our desired return of 13% return. Take a look at this, guys. Boom. $87 is the current price of this company. $728 is our average calculation of this business. This is the reason why I like Alibaba. This is a business that knows how to grow and knows how to make money. The only thing that really is the red flag of this business is that it belongs to a country that is a competitor, a major competitor to the US economy. That is it. That's the noise. That is the noise, folks. It's a Chinese business under a communist regime that is an economic powerhouse. You're buying a quality business at a discounted price. Now, I know probably some people probably disagree with me, and I think a lot of people looking at this price probably feel the same way. But you're getting this company at a steal. Here's the thing, and you're gonna come across companies in the future, and this won't be the only one, where there's gonna be a lot of noise. You have to separate yourself from the noise, folks, of the news, and you had to look at just the fundamentals of the business and say, is this business doing well, and can I ride the wave of risk? And I'll be completely transparent with you. I am down on this position by a lot. I think my average cost is like around 160 to 170. And it's at $80. Am I breaking a sweat? Absolutely not. Why? Because this too shall pass. And guess what? If it gets delisted off the New York Stock Exchange, those shares will just be converted to Hong Kong shares. And guess what? Okay. Now they're on a Hong Kong exchange. They're pink sheets. Big deal. I'm going to hold this until God knows what age. I don't plan on selling anytime soon. But currently, I believe this is an undervalued business, and I'm sticking with it. Anyways, folks, that's the video. Let me know of a company you want to see evaluated. Write it down in the comment section below. Your thoughts on Alibaba and anything else you want to talk about. I'm here for that. I'll see you in the next video. Thank you so much for watching.